Hey traders, Raghee here. Welcome to Charts and Coffee. Happy Monday, everybody. We've got a unique event happening this week. It happens once a year, and that is the FOMC members take themselves out to Jackson Hole, Wyoming, and they start a symposium on Wednesday. It's a 3-day, 4-day symposium. I'm not sure how many days. They talk about what they're going to do, but we know that we're going to hear from Powell on Friday at 10 a.m. So we're going to have a sprinkling, a little fairy dusting of FOMC speak. If you checked out the calendar, there's quite a few. But the trickier part of it's going to be, since this event does have media coverage, it's not the scheduled events alone that we have to be aware of, aside from Powell at 10 a.m. on Friday. It's all those unscheduled conversations that will be broadcasted that are going to have potentially an impact. So, all right, Rog, what's the sum total of that? Well, the other thing that's happening right now is OPEX is done. So that big options expiration, that's complete, and the size is moving out for the most part out to those September 20 expirations. So that's out of the way. With non-farm payrolls out of the way, not a whole lot of major data this week. And it's the last 2 weeks of August. And if anything, summer is no longer Memorial Day to Labor Day. It used to be. If you were trading like I was, over 20 years ago, you took summers off, right? It wasn't just, there wasn't much going on. Now, that's not been the case for about the last 2 decades. I'd say around 2001, 2002, a lot of that changed. So 20, 30 years ago, maybe you took summers off. Last 15 years, not so much, but summer has been reduced really to the last 2 weeks of August. So these are the doldrums of summer that we are absolutely now in. With the Jackson Hole Symposium plus the doldrums of summer, if we're going to stay in this range in the S&P after coming up off of that carry unwind, that yen sort of crisis there for a moment, if this is what we're basically doing, isn't this interesting? This is the daily time frame on the larger chart on the right. This was the 31st, where the Bank of Japan hiked, right, and brought rates to positive territory, somewhere they haven't been in a very long time. The next day, we started to see a little bit of a reaction to that. And, I can't remember all the nuances that were happening on August 1st, but I do know what was happening on August 2nd. And that was the non-farm payroll miss, which caused the US dollar to weaken against the yen, already exacerbating what was already beginning to be a yen strength, quote unquote, problem, especially for those currency hedges of those carry trades. But what I find really interesting now is we've come back. This has come back essentially to where on the 31st and on the 1st, we kind of topped out. So isn't that interesting? That's where the S&P sits after the crash, right? The Dow is not that far off from having pulled off something very similar. And again, you can see 31st, 1st, there's your reaction to the 2nd. Of course, the panic continued because that's all anybody could talk about. And sometimes panic begets more panic, selling begets more selling, until everyone kind of sat back and said, oh, these are some mean reversions on longer term time frames. It doesn't necessarily mean that this notion that the entire carry trade had to be unwound was so catastrophically wrong and so galactically misguided, right? That to think that every single carry trade position had to be unwound because of really what amounted to 0.3 of an increase in the rate from the Bank of Japan was just bonkers, and it proved out to be absolutely ridiculous. Right now, if there is anything to keep an eye on, it is a little bit of this neutral sentiment right now in the NAS, and a little bit of neutral sentiment in the Russell, S&P, and the Dow are far stronger. Am I a bear? Gosh, not unless I hate my money. I'm not looking at punching up now, although look at the Dow right now. I'm not necessarily looking up to punching, to all-time highs and things like that. Again, not yet, but I'm certainly not bearish once the candles start to go green on the daily time frame. And the other thing too, in the most rudimentary way, what are some of the basic descriptions of an uptrend that we're taught as we're learning how to trade before we have other measures to do it? Higher highs and higher lows, as arbitrary as that sounds, never underestimate the importance of that higher high, higher low phenomena. And that's kind of where we're at. We're able to eke out a slightly higher high, but we're able to see the backbone of the movement, which is the lower high, also stair step up. Right. So I think those are also things that we can keep an eye on. But I'm far more bullish S&P and Dow. And that has a lot to do with the sectors within it, right? Right now, the semiconductors are trying to get strong. XLK is trying to recover. But what is strong right now are things like healthcare and financials. And that's where I say, when you know your sector alignment, when you understand the role individual sectors play and where the indices are going to go, all of a sudden it's, oh, of course, that's why the S&P looks stronger than the NASDAQ, or this is why the Dow looks stronger than the Russell. Right? When you take a look at, say, the difference between what's happening on XLF, right, and what is happening on, say, KRE. One is clearly more bullish than the other. XLF helps the Dow, KRE helps the Russell. So these little things make a big difference. All right, as always, gang, if you have any questions, feel free to type them in. And by the way, so one of the things I wanted to let you all know, since many of you tune in every day, right now we're flat as a pancake. On Friday, we had one SPY trade and we had one gold trade, and that's and the SPX testing continues. I know a lot of you have been checking that video out that I shared about a week ago, showing you some of the basic zones and systems. What is a model that I'm following? It's a volatility model for this trading. How is it much more accessible to smaller or medium-sized accounts? Is there an affordability to something that's generally very expensive? Those are things that those are puzzles we're trying to solve. Can this be something that any size account can do? And so far, going into last month of testing, 6 months, by the way, minimum requirement before I even start to talk about something. But the first 5 months have been solid enough where I thought, as we're going down the very last bit of the home stretch, let's bring folks in to see what I've been working on. And I think the thing that makes it work, the thing that makes any process work, is understanding that there is a formula, right? There is a mindset and a model to account growth. It doesn't matter if you're using SPX, SPY, gold, day trading, or swing trading. There is a methodology to that. And I thought, wow, what better a stress test than arguably one of the trickiest 0 days to options expiration symbol there is. So always testing, always improving. So the question here is PLTR. Sure. PLTR definitely got salvaged by the, look, the overall trend was up. You can see here the weakness with the earnings, and it's resumed the overall movement higher. So here's what I'll always say. When are we, and I think this is such an important aspect of trading, gang. Two questions, two big whens. When did the symbol end up on the radar, right? So again, this you don't have to answer, but these are the questions I ask. So when did Palantir end up on the radar? When it was in a trend, right? And if that's the case, you had plenty of opportunity to take advantage of this environment where Palantir was in this trend. Okay, so that's pretty good movement, right? Okay, the second one is how are you handling the proximity to earnings? So for me, I don't want to really be engaged with earnings price action about 24 to 48 hours before the date, right? And I'll give it about 24 to 48 hours after. So a little bit before, a little bit after, I'm going to leave this thing alone, right? And then the other part of this is, and it's probably the third piece, so the two whens. When did this end up on the radar? And then the when of earnings. How was it factored into the game plan because of the volatility, the risk that it could present? And then what? So when, and what? What was the zone that was in play. So this zone here was there all along. It's the zone, it's a dynamic zone between what I endearingly call the equator indicator, right? So this is basically a sentiment line between bullish and bearish hemisphere on the chart. And then you have an anchored VWAP. So if you're thinking, all right, Rag, I'll flatten out of whatever I was doing through this area. I'll flatten out, wait for earnings to make a move. And lo and behold, that's exactly where it went. So this is what I mean. Now, there's nothing for me to do at these higher highs. So that's where I talk about when. A lot of times for traders, they see a gap, they watch something on CNBC. When did something end up on the radar? Because the when matters, right? So if I'm looking at it today, there's not much I can do with it. But if something's on regular rotation, if something's on regular rotation, and I'm a big fan of that. I see a lot of traders trading disparate symbols every single day. And I'm sure for some of them that works just fine. They're usually momentum traders, are usually buying into higher highs. They're usually taking advantage of some sort of, gap, whatever it is. For me, and what I do in the mastery is I want to have a list it's a pretty big list. It's not an intimidatingly large list. It's a handleable list. It's not as if we're handing the members, 4 bowling balls, but it's a list where there's enough choice, but not long enough where it's a task to keep track of. And what does that mean? It should be a relative performance list. So if I'm already looking at where Palantir exists in the bigger picture of the group of stocks, right? Now, when you think about where Palantir is, there's going to be a lot of places that it exists, but then you ask yourself, where is the exposure, right? What are the ETFs? What are the symbols? Aside from things like ARK, this is in the IBD Innovator 50, things like that. But is it in any way tethered to the broader averages? Not at all. So sometimes traders like a symbol like that because it's disconnected. It can move on its own without the NASDAQ, Dow, S&P, Russell saying it's okay. And some traders like an uncorrelated symbol. I will tell you, I don't like uncorrelated symbols. So for me, if it's uncorrelated, the notion of a rising and falling tide, which is really a gift to traders, this alignment is something I don't have. But all that aside, if you can understand those 2 whens and then what it's doing now, what would have been that zone, just look for another pullback to support. It's moving higher. That's cool. I look at a stock like this and it's usually, I'll tell you, Ren, I have no skin in the game. So also keep that in mind as well. It's not something I would typically trade, but thank you for the question. Can I talk more about the color of the bar? Sure. There's actually 3 main colors. Right? Green is bullish, yellow is neutral, and red is bearish. But then there's sort of a subcolor. So the darker color is a down close. The lighter color is an up close. So it's a down close when it's a darker shade. It's an up close when it's a lighter shade. And the same thing applies to the yellow and the red. So I can keep that traditional Japanese candlestick coloring. A lot of folks like to have color-coded candles. That's not unique. What is unique is 2 things. One, we differentiate. We keep that differentiation between up and down closes. And these aren't just based on price. They're price and participation. So it's an understanding of not just that the candle is down or it's neutral, but what is the participation underneath that price action. And Brad, that's what those are. All right. Next up, Eddie asks, I have a risk of so much dollars. Okay. And I normally just buy 1 contract. Okay. Do you recommend me buying 2 contracts with the same risk, which allows me to close if profitable and let the other run? Eddie, I'll say 2 things. One, it depends on what, when you say you can buy 1 contract, maybe you look at less expensive options, right? I don't know how many dollars that is. You don't need to tell me. But maybe let's look at less expensive options. That might be a great place to start. Start with symbols where you can buy an at or slightly in the money option and buy 2 of them, right? Because option pricing can vary. You can find an at or in the money option on one symbol that might be $3, but on another symbol, you might be able to buy it for $1.50, that kind of thing. So I try to find some less expensive options, maybe day trade instead of swing trade, because time, of course, is another aspect to the expense of an option. The more time there is to expiration, there's a certain amount of expense, right, in the premium. So I would always recommend trying to do two, but if you can find one and you have a system by which you know the probability favors, you have a statistical edge, then use the one contract, get out, and slowly build the account to the point where you can say, oh, I've taken enough of these one lot trades to a win where my account size has grown, my confidence has grown, my trust in my approach has grown. Isn't that funny how it should be kind of an organic earn your size and then just go to a second contract? And that's what I've always done. And that's what I've always tried to teach, earn your size, right? Just because we can doesn't mean we should, right? And that's the way I look at it. All right. Bank of America, Daniel. So let's do this. Let's bring up our XLF. So does Bank of America look less strong to me than the other financials? So yeah, let's do a little comparison, right? It's the best way to do it. So if I'm looking at Bank of America, let me move this aside here. If I'm looking at Bank of America in relation to the other financials right now, and frankly, most of these financials don't look very good to me. But yes, it does. It does not look better than JP Morgan, Berkshire. It does not look better than Visa or MasterCard. It does not look better than Goldman or American Express or even Chubb. It doesn't look as bearish as, say, Wells or Citi. I would say it's down near the bottom of sort of strength, or it's one of the better symbols to consider puts in, right? So it just depends on what you're looking at. If I'm doing a hierarchy of strength to weakness, that's kind of a hierarchy of long calls. If I'm doing a hierarchy of weakness to strength, that favors long puts. So if you're bearish in financials, you have a handful of symbols to keep an eye on, and I would say Bank of America would be one of them. Yeah. All right. Okay. Next up is, let's see. Why is Powell at Jackson Hole? It's an annual symposium. Yeah. And why not? It's where the Fed members go in August in lieu of a Fed meeting, and they communicate and they have a big discussion about the economy. Look, it's a holiday, right? Let's just call it what it is. The Fed members are on holiday in a beautiful part of the country, right? So that's really what it is. It's August, and that's where they're at. All right, let's go take a look at where we are to kick off the morning. To take a quick peek at the, there we go. Take a quick peek at the intraday. We have a good bit of strength in the S&P and NAS today. All right. V-Rocket. Oh, fair question. Why is the XLF bullish with so few stocks? Yeah, you know what's really interesting? V-Rocket, this is why high concentration is so important. Take a look at your top 4 names. So this is a great question. V-Rocket asks, gosh, Rog, if so much of this looks kind of choppy or even bearish, how come it's up? Because it doesn't take many stocks in a high concentration weighted world. This is the world we live in, gang. It doesn't take much to drive it higher. 4 of the top 10, top 11 names are moving higher. That's all it takes. So does it matter that Bank of America, Wells are heavy? Did it matter that Citi? Not as much, because as you go down this list, this is in order of its weighting. Berkshire, JP Morgan, Visa, MasterCard, that's your top 4. When they're printing green candles and moving higher, it's going to take more movement or more stocks moving lower to offset the strength of higher percentage weighted stocks in the sector. And that is why. Great question. Great question. All right. Be good to each other, gang. I'll see you tomorrow. Same time, same station for Charts and Coffee. Heads up. We got a lot going on this week. Some scheduled and some unscheduled events out of the Federal Reserve. So this is one of those weeks, unfortunately, I have to turn the dumb box on and keep the television running here in the office. All right, gang. Be good to each other. I'll talk with you soon.